Our last Apex study, Microsoft stock, spanning 3 months on a daily time frame. Personally, trading in Apex is better the higher the time frame. And here, this Apex is formed over 2.5 months. It's not the best, to be fair, in its infancy, but we come down, bounce up, we tighten, bounce up, we tighten, we bounce up, we tighten, right to the middle of the apex. But it does tighten and coil towards the edge, more or less to the average true range, which means it can't really, let's say that's the average true range of the bar, it can't tighten anymore because we'll break either way. And we do break, bang, we slam down. This is a good move, which we'd expect from a decent apex. This is a 15, what's this, 747, this is a 18% move, and of course no one can predict a gap down. But the main purpose of this chart was to illustrate the fact that professionals are aware of this level. They are aware of an apex, its structure. How do we know this? By the very gap itself. At the beginning of today's session, I mentioned that professionals are aware of structure, so we need to be aware, and of course they know how to use it against us and take any advantage any way they can. So we must be very careful with trading in Apex, especially on a stock where there's floating supply. Don't forget that this is a 2.5 month. This is a daily time frame spanning 2.5 months. This has been building for 2.5 months. So from here, traders are going to. They will be very, very intrigued. It will be on everyone's watch lists. It will be on various websites, news channels, Bloomberg, CNBC, etc. So this will captivate and intrigue the market. And if we quickly eyeball the apex, we don't bear in mind we don't have volume, but if we just look at price action, if we quickly analyze the apex, it looks bullish. We gap down here, but we hold and reverse, and then we gap up. We do get a little bit of a scary bar here, but then look, think we're coming down, and then we hold, we gap up, good strong push up, then we come down, good strong firm close. Looks as if we're going to break up to the upside here, and most traders would think we are going to break to the upside, but then boom, as we slam down, we have all these traders which were buying here trapped, and that's a month's worth of buying on a liquid stock like Microsoft is an incredible amount. And this is the lowest. I think we come down to about 40, and I think this is the lowest Microsoft has been since early 2015. We're trading around 90 now, which of course is over double. Unbelievable, really. So why is an apex important? It tells us that a move is imminent. We can put it on our watch list, and when we see the market coil, it's telling us that a move is near and we need to pay close attention. And on occasion, the market is kind and we can read the supply demand imbalance and position ourselves right at the danger point where risk is least. This we cover in depth, session 7 or 8, where we study the internal dynamics of an apex and have a certain kind of rule-based strategy that does stack the odds massively on our favor. It's something called a springboard, developed by Bob Evans. This wraps up the apex studies for the time being. Any questions before we move on to our final subsection?